Welcome to TheoTrade. This is Don Kaufman. September 10th, 2025. An hour to go to the cash close here on this Wednesday afternoon. The S&Ps, for the most part, once again, massively unchanged. But look, this marketplace, midweek here, it's all about this market internals are slipping, but AI keeps ripping. I know, I apologize that rhymed, but it is what it is right now, because the only thing, okay, that stands between this marketplace and literally what looks like the abyss is a handful of hardware involved AI companies. I mean, look at this. You've got Broadcom, huge bid to the upside, up to the tune of 8.3%. Look, I'm covering this right off the bat over here because I want you to see the magnitude of the market cap over here. Do you realize that Broadcom is closing in on almost a $2 trillion market cap? Taking a look at NVIDIA, up another 3.4%. That's a $4.3 trillion company right now. There's nothing else to mention other than maybe Oracle. And, Oracle, all of a sudden, now it's in the fold because it's actually closing in on a $1 trillion, again, a $1 trillion market capitalization. Oracle today up some 35%. Said this time and again throughout the course of the day, Larry Ellison is clearly drooling over a monitor somewhere, hoping to buy probably all of Hawaii as his net worth, well, rivals that of even Elon Musk. They're neck and neck right now. In fact, I think Larry Ellison, who's actually friendly with Elon Musk, may even eclipse Elon Musk today. But hey, look, the bottom line is, I'm looking at this. The market internals, they suck. They're terrible. Okay. There's not a lot of good things going on inside of the marketplace. I mean, you can point out like, all right, the Dow is down. The NASDAQ is actually down today, even with some of these companies that are actually up. And when you start looking at like, what's the saving grace? Is it financials? No. Okay. Because you look around at some of the financials, and here's one where I was talking about Citigroup earlier today. You guys realize this thing's up. It's up basically 40% on a year-to-date basis. Can anybody make a great fundamental argument for Citi being up 40%? Huh? No, is it an economic backdrop that's slipping? Huh? Is it that? Or maybe it's the fact that the Fed is actually going to cut interest rates because, that doesn't help banks either. There's no great fundamental argument for what's going on here. But the real conversation today isn't a fundamental one. The real conversation today is you've got nothing holding this market up but like the energy sector, which is only up 2% on a year-to-date basis. This is a rotation. Again, you can't make a good fundamental argument. Why is the energy sector up? Because OPEC is planning to do what? Cut? That's not positive for energy because the economic backdrop, once again, is slipping a little bit. There's no good fundamental argument. You're seeing actually a rotation of capital. The only thing that's actually got this marketplace, though, positive today, again, is it's not just AI, because clearly AI is not helping the AI trade. It's not helping Google. This could be a critical turn, by the way, inside of Google. It's clearly not helping Meta. Okay. Apple can't get out of its own way. Apple getting hammered. There's no AI there, but Apple's getting hammered after the fact that their phone it's lighter, it's thinner, it's bigger, okay? It's uncut. It's crap. It's the same crap as last year, which is down now another 3%. This is some serious sell side activity. If you look at this, this is almost 2 standard deviations, okay? Double the expected move on the week is side of Apple. And again, there's just not a great story here. So when we start really digging into the market internals, as I said, they suck. You can't even believe the S&Ps are positive right now. You have only 35 advancers, 67 decliners. But the bottom line is, as long as NVIDIA, has got that market capitalization of, again, you have to look at it multiple times for this really to sink in. You are looking at $4.3 trillion market capitalization, which that one company, is worth more than like 300 other companies combined inside of the S&P 500. That's how wild it is, right? So it's all that matters. A little bit of Broadcom to the upside again, closing in on almost a $2 trillion market cap, but the energy sector also kind of holding it together today. There's not a lot of bright spots. Now, Okay, changing gears. When I'm talking about market internals, is it a time for a cause for concern? Well, look, you have CPI coming out tomorrow morning. Might as well bring you over to the calendar. CPI is coming out. PPI came out this morning. Kind of a mixed bag of goods in that particular report. Producer price index. And look, I don't let what that report, the PPI report, I don't let that dictate anything to me. Okay, I read order flow. I'm absolutely like a purist in there. It doesn't matter what I think about CPI. It just doesn't. CPI, I know it's a hand grenade getting thrown at the marketplace tomorrow morning, okay, 5:30 Pacific time. What matters to me the most, okay, out of what today's PPI was or tomorrow's CPI, what matters most is the volatility. And it's interesting because I'm going to freeze the screen for a second, even show you this. It's really interesting. Tomorrow, okay, holds about a $43 expected move. Now, time out. I looked at the expected move for this earlier today, and it was only in the 30s. Volatility has been coming up all day. So this is not options decaying. This is options actually adding value with 1 day left to expiration. So what can kind of be garnered from that is that the CPI is going to be a very significant catalyst, if you will, for markets. And I don't think there's any, predetermined or any closure around this. Like, can you imagine though if the CPI came in hot, meaning inflation wasn't cooled off? So it's a declining jobs market, inflation's still hot. I think that's the absolute definition, if you will, of stagflation. Okay. The only thing I know about CPI for tomorrow is that the volatility is not high, but it is going up as we come closer to today's close. So tomorrow is going to be, as I said, it's, chocolate covered hand grenades getting thrown at the marketplace before we even open. And what concerns me, okay, is that the internals are not good. Even more disconcerting, and this is probably one of the most disconcerting areas, we missed today the upper edge of the expected move in the SPX, okay, minimally. We missed it. We started fading. The market this week started, okay, right here at about 64.80. Where are we right now? About 40 S&P points higher. So we've only rallied about 40 points. The week is expecting about $86 of movement. Obviously, there's already $42, $43 priced in for tomorrow. As I said, that number has actually come up. So what's the real disconcerting area of this? It's not even the NASDAQ slipping right now. You want to see the most disconcerting area? Okay, here we go. Take a look at the VVIX. Take a look at the VVIX. What are we looking at? This is the volatility of the VIX. Skyrocketing today. Somebody sees something coming. Market internals suck and the VVIX is flying. There's no question. Okay, they are out and they are hedging. And if you ask who they are, okay, it's clearly not you. They, being institutional money managers, okay, prop firms, hedge funds, they, okay, are on the bid in volatility in a big way. Almost a 10% move up in VVIX. Put your helmets on, people. That is real. There's like no sign of this crap. Like, yeah, the market's slipping a little bit and the VIX is kind of, flat on the day. It doesn't show you anything. If you're not looking at the VVIX, you ain't seeing what's really going on. So I looked over at the VIX itself. Okay, I looked at the VIX itself and I thought to myself, oh boy, now we got problems. Why? The volume of the options, not only is the VVIX higher, but the volume in the options in VIX is freaking extreme. Okay, it's doing 1 million contracts in VIX today. And the VIX, it can trade from time to time. Things get a little crazy. Let's get crazy. Okay, but there's an extreme bid, okay, on calls in VIX today. It's any way you want to put it. Either somebody's taking a bearish bet in the marketplace or they're hedging because they believe that the marketplace could pull back. There's no other rationale that you can have for the VVIX heading higher because it's the VIX of the VIX. Basically, volatility is going up because people are buying call options in VIX and they're doing it in size because over 1 million contracts actually traded in VIX today. So the people, that's the story. I don't have to go any further than that. Okay. This is a time where, look, I know that there's a big announcement coming out tomorrow. I'm well aware that the marketplace has rallied, cracked all-time highs, and actually is reversing right now, okay? I don't even care where we end up today. It's not where we are right now, okay? It's where the puck is headed. And right now, okay, there's risk building in the marketplace in a meaningful way. And this is the first time in quite a long time that I can actually point like, a little hint of VVIX here, okay? This isn't a little hint of anything. This is just outright blatant buying of volatility out in the open. I think a lot of people are actually probably going to miss it. They don't look at that. Okay, the market internals coupled with that absolutely suck. We have an $86 expected move, but interestingly enough, what also tips me that there's a lot of risk actually coming is take a look. This was at 42 and 43 a moment ago. Now it's up to 44. Put your helmets on, people. Okay, we're going in. Things are about to get very, very interesting in the next 24 to 48 hours of trade. I will be with you through all of it right here at TheoTrade. Thanks everybody for tuning in to this evening's video. Have a wonderful evening. Bye-bye.